Hello Wolfpack, today I want to be debunking some charts that I've looked at that would support the bullish argument and arguing, well, against that obviously as to why they're actually not as bullish as they may seem. And I want to be looking at the Bitcoin daily chart as well. Now, this isn't to, be a perma bear or anything. It's just to literally invalidate the false logic that's circulating Twitter. First and foremost, before we get into some charts here, or some new charts that I typically don't look at, let's just go over why this structure is not actually confirmed to be bullish yet, and go over when it would be confirmed to be bullish. As a lot of you guys would know already, this is my kind of base prediction on Bitcoin. And if you don't want to hear this, skip forward a little bit and you'll see some new charts. Now, essentially, what I'm thinking about Bitcoin, guys, for those of you who haven't watched my videos, is that I think that if we get above 48K, I will be bullish on Bitcoin again. There's many reasons behind that. One of which being getting above 48K would get us above the 50-week SMA. Getting above the 50-week SMA historically has only led to all-time highs, and getting below it has only led to 200-week, which is down at the 20K region. So my prediction, by logic, is that we're heading downwards towards the 200-week SMA. By the time we get there, it could be anywhere between 20 and 24K. I don't think we'll go much lower than that. I think that will be the bottom. And as for predictions, well, we could be getting there by November, according to the 4-year cycle theory, or we could be getting there by as early as April or May, depending on what happens with interest rates. But I would lean towards the November speculation, November theory, as it's just speculation with the interest rate situation there. So we're not actually sure what's going to happen in terms of time frame, but we are pretty sure that, hey, unless we get above 48K, the 200-week SMA is the base target, and even the bulls will tell you that 48K is a critical zone. So why are we bearish on Bitcoin right now? Well, first and foremost, we're in this pink ascending wedge formation. An ascending wedge formation is kind of a formation of exhaustion, a pattern of exhaustion. It means that the trend is unsustainable. This is supported by the fact that volume is decreasing in the entirety time of this upwards trend. When volume is decreasing in an upwards trend, it means there's a lack of momentum, a lack of buyers on a day-to-day basis willing to buy. So less buyers than the day before, and eventually it gets flipped over to the bears having the strength, right? So basically, it means that there's no momentum. When you see a strong move, and if you are seeing a strong move, you will see increasing volume, right? Because that means that the move is progressively building and building more momentum. Right now, we're decreasing in momentum, which means there will be a turning point as to where the move cannot continue any longer. On top of all of this, and this should be enough evidence, but on top of all of this, we're seeing a very small, very slight, but a very early indication of a bearish divergence on Bitcoin. Now, this is not a double top formation, right? This high is slightly higher than the last one, and in that period where we've had that slightly higher right shoulder high, we have seen a lower high on the RSI, which means it's a bearish divergence. So we have three critical signs telling us that, hey, this is not a strong move. Now, these signs don't necessarily mean we're going to reject straight away. That's not what it's saying, but it is saying that it doesn't look favorable for Bitcoin right now. On top of all of this, we're heading into Ichimoku cloud resistance. We're heading into bull market support band resistance. We're heading into the ascending channel resistance. We're heading into a shorter term resistance on the 4-hourly, as seen by these yellow lines here. And we're also heading into longer term VVPR, which is volume profile, POC, which is essentially at 47K. And it's the point in which there is the most historical trading volume, which means that it is a very likely zone to reject. Sorry if this chart is a bit messy, but that is the overall stance on Bitcoin right now. Essentially, to sum it up, we could go as high as 48K, but we probably won't be getting above 48K. And as long as we don't get above 48K, that means we're still bearish on Bitcoin. Now, this is the 3-day chart on Bitcoin, and this is a very important chart. I like the 3-day chart. I look at it quite a bit. And what we can see on the 3-day, keep note, all right, so right now we have the Ichimoku cloud, and we have the red and green lines, which is a 50 and 200 SMA. So 50 3-day SMA and 200 3-day SMA. Now, what we can notice is that this is the 2013 bull market. During the fall down, during the come down on the 2013 bull market, we see the red and green lines clamp together, right? And during this clamp, we have one final push up to the Ichimoku cloud before rejecting downwards, and we bottom out on the 200 week, which is not shown here, but that's where we're assuming the bottom's going to be in this cycle as well, as I said previously, at 20 to 24K. Now, the same thing happened in 2018, okay? So we see the clamping of these red and green lines, which is the 50 and the 200. And during the clamp, we see one more final push to retest the Ichimoku cloud before rejection to the 200 week, okay? And so in this cycle, we're seeing a very similar thing. We're seeing the clamp of these red and green lines. And currently, we're actually probably going to be seeing, or maybe a little bit in the future, one more push to the top of this Ichimoku cloud, or one more push to the top here, which would be at around 49K. Okay, that could be a wick up from 48, or we could wait, until April and we could see it at 42. And that would be the test before we crash down to the 200 week, right? And we'll probably see it like this, something like that, and then a crash down to the 200 week, right? And that could happen, as I said, if interest rates are spiked, or it could take a long time to play out. It could take until November, which is back over here, okay? So that's an interesting thing to look at for the 3-day chart. This is a new chart I haven't looked up too much. And now we have the 5-day chart, and this is another very interesting chart on Bitcoin. And this chart is just representing that even, it's not just the daily chart or the weekly chart that's showing resistance in that 48K region. It's actually the other charts as well, such as the 5-day, which has its Gaussian channel currently at 47. It has the Ichimoku cloud currently at 48, and it has the 50 MA at 47 just as well, just with the Gaussian channel there. So there's lots of resistance here on the 5-day chart as well, which is a very common chart that a lot of traders would look at. And this is the monthly Bitcoin chart, in which we're looking at quite clearly a clear MACD cross, right? A bearish MACD cross on the monthly chart, where that blue line is crossing over that red line. The MACD line is crossing over or crossing under the signal line, right? And that is the trigger of a bear market, as we saw in 2018. In 2018, we saw that MACD cross. We did not recover until we reached the 200-week SMA. Okay, so we saw a bearish MACD cross here in June, and we bottomed out here in around January, around 6 to 7 months later, okay? And then we saw a bearish MACD cross here in 2014. We saw that happen in August, and we bottomed out in 2014, 2015, in around August as well, or even January, depending on what chart you're looking at. So again, that's a another period of, well, let's say 4 or 5 months. So we saw 5 months in 2014 from the MACD cross to the bottom, and then 6 months in 2018 from the MACD cross to the bottom. And seeing as we've seen the MACD cross right here on Bitcoin, let's see when we actually saw that. Okay, so starting in about January, we'd be looking at around June if we were going off that fractal, but that's a bit debatable as the time frame. The point is, every time we've seen a bearish MACD cross on the monthly, it leads to a bear market. Now, that's only 2 times, so it's worth taking with a grain of salt, but it is worth considering nevertheless. And now I want to debunk a popular bullish chart that a lot of the bulls would be using on Twitter to hype people up about the state of the market, and that is, as you guys would have seen, right? Most people would have seen this at least, the hidden bullish divergence on the weekly chart, in which we're seeing lower lows on the RSI, right? And higher lows on the price action. Now, this is a clear bullish divergence, right? There's no reason as to why this would be bearish, except if it's happened before and didn't lead to anything, right? And that is actually a very considerable reason to be bearish. Now, on top of this, even though we're seeing this hidden bullish divergence, we're also seeing a bearish divergence on the RSI, right? A very clear one, and a much bigger one, that said, on the RSI. Clear bearish divergence there, but some would say that we have to discount that bearish divergence as it started before the hidden bullish divergence. I would kind of agree with that. But even with this information, we have to take into account that in the past, in the 2014 bull market, right, we saw a very similar structure where we had a bearish divergence on the RSI and then a hidden bearish divergence down here, right, between these lows. And during that period of time, even though we had literally an identical structure on the RSI in 2014 and 2013 as we do now, we still crashed down to the 200-week SMA, as I am expecting here. And so I would discount this information. So those are some new kind of charts that I haven't looked up too much on Bitcoin. I will keep track of those as time progresses. And I hope you enjoyed that. And I hope you kind of appreciated that debunking of a popular bullish chart, that weekly hidden divergence. Very popular chart right now. It's going around quite a bit. I don't think it's actually worth much. I think it's definitely worth considering, but when you take into account that, the structure is very similar to what we saw in 2013, and the fact that, well, in 2013, we had this hidden bullish divergence that everyone's talking about right now, and it still led to a crash, we have to discount it to a certain extent. We can't rely on charts that have not succeeded in the past, right? Especially when it's only happened twice, and one of those times it didn't succeed, right? So it's got a 50% success rate, not even that, because this one hasn't even played out yet. So it's got a 100% fail rate. It's just not worth considering at this point. But I looked at some new charts here. I hope you enjoyed it. Just a little, toss things up a little bit, mix things up. Thanks for watching. Hope you enjoyed, and I'll catch you in the next video. Thanks.